welcome back, and joining us now to put the day's market action into perspective is Coertze from Cartesian Capital. Thank you so much for your time, Carl. I'm quite confused about, the moves that we are seeing in the markets today. Quite a mixed picture. We do have the JSE sinking back slightly into the red today after a week and a day in a green territory. But surprisingly, even though producer inflation in the US surprised to the upside, those US markets are trading in the green. What have you made of market sentiment and also just how those inflation numbers are impacting markets at this point? Of course, we do have that consumer inflation coming out tomorrow.
So yeah, thanks for having me. Well, I think in the local markets, the biggest news of the day is probably the announcement that the NHI bill is going to be signed into law tomorrow. So if you look at companies like Netcare and Life Healthcare, they seem to have been negatively affected by the announcement. I'm actually surprised at how well the rand has held up despite this news coming out today. Whilst the NHI may be noble in theory, I think that the market is a bit concerned about its implementation, as it is unsustainable in its current form, especially if you consider the recent track record of our state-owned enterprises. And yeah, those PPI numbers, I saw they came in at 2.4% year on year. Year on year, it was as expected. And if you look at core CPI, which comes out tomorrow, numbers for January, February, and March came out at 0.4% month on month, making it appear as if no progress was made. But if you dig a bit further and you look at the numbers to 3 decimal places, January was 0.392, February 0.358. and March 0.359. So there was some progress made. And I actually believe that the Fed has managed to slow down the parts of the economy that are interest rate sensitive. But the Fed is not able to affect the supply of labor that continues coming to the market through factors such as immigration, or even to affect the lack of supply in the housing market, which continues to put upward pressure on inflation. And in fact, some theories suggest that lowering interest rates may even assist in lowering shelter inflation, as lower rates could stimulate construction, leading to more supply in the housing market. And we know that shelter makes up a big component of US inflation.
Yeah, of course, that path of monetary policy remains a key focus for investors, and of course we will be getting that US consumer inflation print out tomorrow. And also thank you really for connecting the dots for us there on the NHI. I actually didn't think of looking at the shares of Life Healthcare and Netcare today. All my attention was on Anglo American. And let's get to Anglo American. I mean, they're coming out today announcing a major strategic rejig. They're saying that, and I mean, yeah, it was quite surprising also to see them kind of going against BHP, but also kind of agreeing on the Amplats, part of the structure, that they will leave Amplats behind, but they're keeping Kumba Iron Ore, also saying that they're also not keeping De Beers. We did see that share price down about 5%. And I'm wondering if there's maybe something that markets were not sold about here.
Yeah, so Anglo American CEO has previously said that there are no sacred cows in the Anglo stable, and it seems as if he has made good on the statement with the demerger of De Beers and Amplats. So whilst Anglo had likely been looking at demerging Amplats and De Beers previously, I think the timeline was probably accelerated by BHP's recent bid of Anglo. It is Anglo's view that both Amplats and De Beers would be able to unlock more value as standalone businesses, and the full value of these businesses are not reflected in the current group structure. BHP's second rejected bid of Anglo also required Anglo to demerge Kumba Iron Ore in addition to Amplats. Interesting, Anglo have doubled down on Kumba. Anglo today announced a strategic plan to unlock value, wherein Anglo announced that it would focus on copper and premium iron ore going forward. Anglo will also be making disinvestments in steelmaking, coal and nickel, whilst maintaining optionality in its crop nutrients business. If there is a sacred cow in the Anglo stable, it might actually be the crop nutrients business, which costs Anglo $1 billion per year, and first production isn't expected until 2027. Anglo did announce that they would be slowing down capex in this segment, but they might do well to find a partner that has experience in polyhalite mining to help shoulder the cost of this expensive endeavor, because this cash flow could perhaps be better utilized in its copper business, it would seem.
Well, we will be looking out to see if BHP does have a response to this. Let's get to MTN. Of course, it had been releasing their quarterly numbers out from the different regions, and today they released the quarterly results for the whole group. There we did see that share price nose diving over 8%, all revenues declining except for fintech. Is there just no relief for MTN at this point?
Well, as expected, MTN Group has taken another hit from MTN Nigeria, its largest market, due to a sharp devaluation of the naira and high inflation. This resulted in a significant decline in services revenue, which dropped by 52.8% in Nigeria compared to the same period last year, contributing to overall group revenue decline of 18.8%. But South African operations showed better performance with a 3% increase in service revenue. Data traffic also increased by 36.2%, with contract users averaging 12.9 gigabytes per month and premium users using 3.3 gigabytes per month. MTN South Africa also plans to increase data prices in the current quarter due to increased consumer demand as well as inflation.
All right. Well, let's get to your stock pick for today, Kyle, as we wrap up the conversation. What are you hanging your hat on today?
I'm hanging my hat on Apple. So China sales in the second quarter have looked a lot better than the first quarter sales. Despite recent negative sentiment around Apple's prospects in China, there are still 220 million iPhones in China, of which 130 million haven't yet upgraded in the last 4 years. We are also in an environment where there's a great uncertainty around when the rate cutting cycle will start. And mega tech companies like Apple are sitting on billions of dollars in cash and don't really rely that much on debt. Hence, they have the ability to act as defensive stocks in such an environment. And Apple has recently pulled back, and I think it's got some space to run.
All right. Well, thank you so much for running us through what has moved investors' money today. Kyle, appreciate it. That was Coertze from Cartesian Capital.